Write-up and Memo. Recursive thoughts on style and Enwell Energy, ENW, traded on the London Stock Exchange. Hello everyone. It's been a while since my last letter, and even though there are usually gaps between my fierce battle against my disdain for writing, or in other words, publishing articles, and it may feel like business as usual, it was not. Not to make excuses or anything, in this instance my absence was due to the misfortune of my computer failing, and I'm only now back up and running. So thank you for having me back. Today's write-up is a bit unusual in that instead of focusing solely on an interesting idea, I will dedicate some time to explaining the indirect lessons learned from exploring this ownership. Spoiler, this write-up is not an idea that I will act upon. In other words, I will not be owning a piece of this business. What triggered this special piece is my thinking through some of Buffett's lessons. I started studying Buffett about 5-ish years ago, and although many of his lessons make sense, I had an epiphany as many of the things about Munger's influence fell into place. I'm not sure if that makes sense, but hopefully you'll follow along in the section on the right, or as always, feel free to just skip it. Instead of writing it saying long disclosure here, please reference it from my article. None of this is made to be construed at or taking as financial advice. Please advise your financial advisor. This company we'll be studying today is Enwell Energy, ticker ENW. Enwell Energy is a Ukrainian-based company listed on the London AIM market. Its primary business operates centers around oil and gas exploration, development, and production, with heavy focus on natural gas and gas condensate, which they sell to the domestic energy market. Gas sales account for majority of revenue. Well, that is before special caveat, but we'll get to that in a second. Before the Russia full-scale invasion in 2022, Enwell, or Regal as its older name, and its affiliate were among Ukraine's top private gas producers. Estimates indicate that Smart Energy Group, that is the majority owner of Enwell and subsidiaries, produced approximately 1 million metric cubes of gas per day as early as in 2022. Quick history about Enwell. Enwell is a new company in the sense that it was born of divestments and rebranding in 2020, originally operating under the name of Regal Petroleum, an oil and gas company founded in Ukraine in the 90s. Its first incorporation name was Hillgate Limited, and in 2002 it was officially rebranded and listed on the AIM exchange in London under the name of Regal Petroleum PLC, September of 2002. Its business was built in Ukraine around the Mikhailovitska Gold Shinska, and again, I want to butcher all these names, but the acronyms are MEXGOL and Svyrdinska SV, around the gas fields in Plutova. The business then underwent multiple expansions through exploratory projects in Greece, Romania, Egypt, and Liberia. In 2011, the Smart Holding Group, controlled by Russian or Ukrainian oligarch Vadim Novinsky, gained control. As of 2012, major assets outside of Ukraine were divested, and in 2016-2019, the company acquired the VAS license through, through Promenego Products, and drilled several wells in the MEXGOL SV area. In 2020, the company purchased Arcon Gas Energy, gained SC license, and compelled the rebrand to Enwell Energy to introduce a new chapter solely focused on production in Ukraine. The current hiccups, though, you can assume that anything to do with Ukraine has a lot of twists, a fate of turns since Russia's invasion in 2022. The business landscape is highly uncertain, and for that reason, many value investors have actually begun exploring the potential investments here. Let's not digress from the topic. My apologies. Enwell's fate is that at the moment deeply tied with its primary shareholder, Novinsky. In December 2022, Enwell started experiencing pressure from the government due to this relationship. The government sanctioned Novinsky due to his alleged pro-Russian activities. In response, Novinsky claimed to have transferred ownership of his assets, of that being also Enwell Energy, to his two Cyprus trusts, Smart Trust and Step Trust. Smart, as of today, owns 82.65% of Enwell Energy and its subsidiaries. In January 2023, the Ukrainian Justice Ministry restored Novinsky as the ultimate beneficiary of these subsidiaries, alongside legislation allowing the Ukrainian government to suspend Enwell's license to operate if he were to come under sanctions. In May the same year, this became a reality, and the licenses to operate were suspended for Nashonsky, again the VAS field, and the CS fields, meaning Enwell was not allowed to operate them at the time. In June, there was a reversal. However, the suspension did come back in November of 2024, this time with a time frame of 10 years. Those who know anything about oil and gas, those 10 years will eventually bankrupt the company. So if the company cannot overturn this, its fate is sealed. In August of this year, Enwell Energy filed a formal arbitration case against Ukraine with the International Center of Settlement of Investment Disputes, ICSID, claiming that under the UK-Ukraine bilateral investment treaty, British assets should not be suspended. May I remind you that Enwell is listed in London. You can find more of this on their website, where they actually publish the full report and their press release. The company is seeking monetary damages for losses incurred and reinstatement of its licenses. Another note is that the company does have a shadowy past with the following regulations. For example, in 2006-2007, there were issued disputes over production licenses and even fines from AIM when the chairman stepped down over a non-commercial well in Greece and the sale of Ukrainian assets without following regulations. So take that as you will. While you might be interested in this idea, it's really easy to wrap your head around. Enwell Energy is a company trading below cash value that has highly productive assets, with the caveat that if they are legally restored again. What do I mean? The company is trading approximately £61 million and has over $73.5 million, pounds in cash, minus a ambiguous debt of £700,000. Prior to the war, they achieved returns on equity and capital over 30% and generate millions of pounds in free cash flow yield. You're buying it at a price to book value of about 0.5 at the moment, and if you look at what they were generating prior to the war, so let's say 2021, it's almost 70 million in free cash flow and a net profit of 50 million pounds. It's a bargain looking at just the numbers. Now, the caveat, of course, are significant: the losses of the licenses, the amount of money that will burn while they deal with the regulatory issues, and how accessible the cash will truly be as the situation gets unfolded. Let's not forget this is a Ukrainian company, and there is a gray area regarding the alignment of management. Regarding the cash burn question, executives are also receiving compensation, although it has been reduced. Specifically, directors' reimbursement was 0.441 million, down from 0.934 million in previous year, and 1.63 million for the full year of 2024. The rest of the cash burn is minimal, around 1.2 million semi-annually, and this was disclosed in this semi-annual report. However, it is important to note that the cash positive due to interest income of 4.5 million, so they are earning interest on the cash that's sitting. The breakdown of all this is not really detailed in the interim reports, but CEO Cyril Haide, again, I'm butchering all the names. Total compensation at approximately 261,000. Salary plus bonuses, no equity grants are granted to him. They have had a change of management, so do look if you're interested. Another factor to keep in mind is that about half of their cash that is used to pay operators, administrator, etc., is in Ukrainian hryvnia, subject to wartime reparations, restrictions, and currency risk. UH has depreciated since the start of the war by 41% against the dollar, 22% against the Canadian dollar, and 32% against the British pound. So what really made me think as I'm looking at this idea, obviously, some may say this is a classic value play or maybe value trap, but what made me really consider this study and this idea was truthfully that I've been spending last couple months rereading a lot of investment letters from Buffett and Buffett's disciples. Look out for a letter on Michael McCloskey and maybe more in a few months. And many questions were surface. Questions like, what investments do I look for? How do I assess what I'm interested in getting involved? Buffett's quote of that all intelligent investing is value investing. And what is value investing anyway? And these, you can see I'm kind of going this down this roller coaster. But my reflection after analyzing Enwell Energy is that the reason I think that this idea is not for me is that I'm not a venture value investor. In my mind, this means I'm skeptical of ideas that are sold as if you're right, the profits are substantial, but if you're wrong, especially on the decisions that are not made by the business, with many unknowns controlling the outcome, there's a risk of permanent capital loss. So for me, this kind of idea essentially becomes a venture bet. I think that looking back at Buffett's rules, rule number 1, don't lose money. Rule number 2, don't forget rule number 1. And Charlie's insistence on focusing on buying more quality businesses really comes back here. I feel that the bet on Enwell Energy, it's a risk of permanent capital loss or a huge payout, and I don't think that's for me. Some might play devil's advocate and call it a heads I win, tails I don't lose much strategy, but I think that you're in a wall of unknowns, and that pushes it into the too hard pile with the lottery ticket attached. Another idea that kept coming back is from Charlie Munger's remarks during Berkshire's annual meetings, where he points out that the most effective filter for buying a stock is comparing it against something you already own. I believe this example he used was Coca-Cola, saying that before they buy an investment, it needs to be better than Coca-Cola, otherwise just buy more Coca-Cola. For me, I've been striving for a concentrated portfolio with a goal of maximum of around 18 stocks. As I explore more ideas, I think it's becoming easier to use this filter as a tool. I may find similar ideas, but many of my portfolio I just like more, and I'll rather much buy more of those than invest into a new idea. Long term, I think there are 2 points. I think these 2 points are a lot more about sustainability. The first, the lottery ticket of venture bets might play out here and there, but in the long term, it could lead to a crash and burn. Additionally, this allows you to constantly battle test your ideas from resilience baskets as you carry forward. Anyway, hopefully it's not too boring. I'll explain more on these thoughts, perhaps in my annual letter. I'm paraphrasing Tobias Carlos here, again, butchering his name. But he says that you may be thinking of many ideas, and you only need to look back and realize the Berkshire Boys have figured it out ages ago. So in conclusion, I may as well be repeating myself here, but for those who skipped to the end, Enwell Energy appears to be a very interesting company. It's just not for me. Had a lot of fun wrapping my head around it. However, it just doesn't align with my investment discipline or framework. I think that it's closer to a venture bet where you bet on a huge upside outcome if things go your way and take out a greater risk of permanent capital loss. You could make the argument that this bet is a heads that win, tails that don't lose much, but the cash burn and uncertainty over how much it will cost as things drag on, as well as the legal disputes over outside of my circle of competence, just make it outside my play. Not to even mention the certainty of how Ukraine's war will end and the trajectory of the wartime government's post-government legislation or the release of the assets, how that would shape towards shareholders or main shareholder rights will be in place. And adding too many risks to the equation and turning into a complex uncertain situation that's going to be a too hard pile, not to mention opportunity loss, opportunity cost, and what else you could have invested in the meantime. Hope you found this at least something interesting. I also had fun into looking at this. If you're ever interested in the full report, let me know. I have more information on my old computer, if I can just get it out. Well, 2 other things ahead. Be well, everyone. Cheers.